All right, so we opened under pressure this morning, and of course, we're still under some pressure here ahead of this jobs report. Now, one of the things that hit us today, well, we had the initial jobless claims and then the ADP report, which I thought was intriguing because this came in well below consensus. But the details of this report sort of really are the theme of 2023, at least what we're bracing for. Look at this, folks. Massive, I'm talking massive layoffs in large corporations. It's the small corporations, the really tiny corporations that kept us going. But if this keeps happening, at some point, you know it's going to happen with these smaller names as well. So listen, small America keeping us going again. But big layoffs is a big theme. And listen, Wall Street says it's actually the right sentiment. I'm going to get into that a little later. Meanwhile, it is the era, or maybe it could be the end of an era. Take a look at this. I don't know if you remember. Remember a couple of years ago, we used to talk about this a lot. Negative yielding government bonds, like you pay the government money to hold your money. It was nuts. It was over $18 trillion. Well, guess what? It's finally come down to zero. What are the implications? And more importantly, what have we learned? Will central banks ever go back to that? And it's the new investing craze. And I got to tell you something. Looks like everyone is doing it, folks. We're talking about the guessing game. We're sifting through the ashes of 2022. We want to find the big score. What could help us recover a lot of that loss last year? Of course, all of it's going to be predicated on Jay Powell and company, but we could see everything was down. Gold, probably one of the best things, but this list goes on and on and on. Joining me now to kick off the show, Bianco Research President Jim Bianco. By the way, Jim, great hanging out with you at the Double Line event with Jeff Gunlock. It was amazing. And I got to say, it felt to me you were the most bearish person in the room. So I want to start with that. I want to start with the idea of Jay Powell trying to do away with the so-called Fed put, and just so that the audience understands, because this term is used a lot. It kind of began under Alan Greenspan, where he became accommodative, right? He was the chair of the Federal Reserve, and through that, he sought to support the U.S. economy by using federal fund rates and the Fed's arsenal to buoy markets, particularly the stock market. So the Fed, for years and years, since 1987, has come to the rescue. They've always come to the rescue. You say that this time around, Powell's going to make sure that doesn't happen. And if that's the case, maybe it never happens again?
Yes, and it was good with you yesterday as well out in Los Angeles. But yeah, I do think that the Fed, remember, let's back up and remember that when we talk about the Fed, we really mean Jay Powell, because the chairman is the benevolent dictator. I'm sure, and I know that a lot of other Fed officials don't agree with this, but I believe he does, and he's what matters. He believes that we have created, I'll use another phrase, moral hazard, that too much over-speculation has been occurring in markets over the last year. Buy risky stocks, because they'll go up and make you a lot of money, but what if they don't go up? The Fed will support you to make sure you don't lose your shirt. And so we had all this rampant behavior, whether it was crypto or unprofitable tech, or anywhere in between. I think in the era of inflation, he's been putting his foot down and saying, that's got to end. The Fed is not here to make sure that you make profits. If you're going to make profits, you better buy good ideas that pan out in the marketplace, as opposed to just whining that the Federal Reserve needs to print more money to buoy all the markets. Yeah, and I think that this is the difficult thing that markets are having a hard time coming around to.
It's hard to grapple with the notion that the Federal Reserve gets to determine what's a good investment and what's a bad investment. And if I buy something they don't like, they have the right to make it go down. I mean, that's crazy. That seems to be a little bit off the rails. But there was something I saw also today that reminded me of some of the things you were talking about. The notion that layoffs are good for sentiment. So the Bank of America, their analyst, tech analyst, Justin Post, he suggested that the increase in layoffs by Amazon, remember it was going to be 10,000, now it's 18,000, that it would improve sentiment about Amazon's management. I guess it seems cold, but the notion that management is willing to fire as many people as possible, is that what Wall Street wants to see?
Yeah, unfortunately, we're in this bad news is good news type of thing. Wall Street, going back to the Fed put, what it really wants is it wants the Fed to stop raising rates, lower rates, cheap money, make the market go up. And if the way to get that is Amazon lays off more people, Google lays off people, Meta lays off people, then we go beyond tech into real companies laying off people. I'm old enough to remember when that wasn't a good story for the markets, but now it is. Yeah. We want bad news so we could use the phrase Fed pivot. Please stop, cut rates, and the market go up. the upside down world we're in.
It's so counterintuitive. I got to ask you about the bond market. A lot of folks, even we were yesterday, saying that they want to be long bonds. Here's the interesting thing. People are long bonds, and this is never before, folks. This is the money that went into bonds. I'm talking, this chart goes like 20 years, never anything bond funds, nothing like it. Also, the decline in bond funds, never saw anything like it. How do we reconcile this? Are these folks going to be okay when the day is over, the people who bought into this wreck?
Yeah, this is going to be a tough one. I think the reason people are buying into bonds is because, you'd mentioned it a minute ago, we have no more zero yields in the world. We actually have a yield. If you own a fixed income security, you get an income off of it. That's new, and that's got people excited. Also, the losses that they just took in 2022 were the greatest ever, and there's a lot of mean reversion on Wall Street, meaning if it was a bad year last year, it's going to have to be a good year this year. Over time, I'm a little bit cautious on the bond market because I'm not convinced that the inflation story is completely behind us. 9% is behind us, 8% is behind us, but if we settle out at 3 or 4% on the inflation rate, bond yields aren't going to go down as much, which pushes up the price, I think, as much as people are hoping for, and there's going to be a struggle. That's not going to be the case forever, but I think it's going to be a follow-through in 22 and into 2023.
Although, you know, the bond yields have been secular, right? You go up for 30 years and you go down for 40 years, and if you're in that last 40-year period, you may not know that it can actually go the other way for decades as well. Jim, great. Thanks for starting the show. Happy New Year to you, my friend.
Happy New Year to you.
Hey, I want to bring in Slate Stone Wealth, their chief market